I would like anyone looking to get into real estate investing or people that are currently invested in it, just be aware of the different classes of real estate. And people are likely already aware of these, but you think of like, I break it down like there's residential real estate and there's commercial real estate. In my mind, residential is single family homes, maybe a single family home or a duplex. But then the other side is commercial real estate, and think of all the different types of real estate that would be classified under commercial. There's industrial, there's warehouse, there's like self-storage units, there's mobile home parks, RV parks, multifamily units like apartment buildings. I would leave those in the commercial side. And that's kind of the way that lenders do that as well. When you've got more than 5 units, lenders are going to do a commercial loan on that. So anything less than 5, I would think of more residential. But I'd recommend to people that like find what you like, find what you're good at, find like if you like working with certain types of tenants, like find your little niche and just focus on that. Because I think people get much better rates of return and they focus on things that they like. So you might as well invest in those areas of things that you like.
And I'm passionate about it on our side, helping especially new investors as they come in. We help a lot of experienced investors, but you see the difference of life-changing wealth that can happen. I've seen first generation people coming in and just how that changes their financial future and their kids' financial future. So it really does get me excited. And there's a dramatic difference between people owning real estate and not in terms of net worth. It's like a $200,000 difference, and it's just it's something that can change. Generations have done right.
Something that's eye-opening. It was eye-opening for me. I've been in it about it's been 13 years since I've been into. Well, it's been almost 15 years. We bought in 2008. I was a real estate investor, but I wasn't like really focused on the rates of return and crunching all the numbers specifically with that till a few years ago. So it's eye-opening for me. And when I show it to people, like the differences of the rates of return. So make sure you're understanding the different like rates of return and cap rates and stuff with real estate. But the question is a very common question, or more of like a doubt or a concern that people have. They go, oh, I can go get a 5% rate of return on these municipal bonds or whatever it is. I can go get a 5% interest rate of return or dividends on these stocks. And your real estate, you're saying the net operating income is like a 4.5% cap rate, which means the rate of return on the property itself. So they're trying to compare 5% like stock return to a 4.5% real estate return. So the real estate return, that is one single aspect of the return on your investment. And some people get so focused on that, they forget about all, like, in my opinion, the better rates of return on the real estate. Because there is the cash flow. That's what people are focusing on. There's the cash flow return. There's the appreciation of the property return. The tax benefits, and you don't want to get me started on that again, but the tax benefits, like your net income isn't getting eaten away with taxes. And then the last part of it is someone else is paying down your loan. So it's like these real estate, you can leverage it a lot easier than say stocks, and someone else with that cash flow is paying down your loan. So you add like some of these rates of return, like I'll look at one, like 15% is low, even in today's market, like 15% like rate of return, if you combine all those aspects, is a low rate of return. And there's some like we'll see 30 or 40% rates of return. And unless you break it down, it's pretty hard to kind of comprehend where it all comes from.
I agree, which is also why like having a good CPA that can kind of show the big picture of that is such a big deal, because people will just see, well, this is what I'm going to make. I'm making a couple hundred a month, or I'm making this or whatever, but not realizing that you're getting that $400,000 asset for $80,000 down, and the depreciation and the appreciation. I mean, when you add it all together, it's pretty amazing. So,
Yep.
Do you think, I've had a lot of business owners ask this, and I have my opinion. I want to ask from a CPA standpoint, do you think they should own their own office or warehouse for their business?
So I think that's a great idea. Earlier I mentioned that there's limitations on like some people with like passive real estate investments. Like there's some limitations on the tax deductions there. But if your business owns its own office, you don't have that same limitation. So one, the tax benefits can be really good. And banks, lenders and banks, they seem to love to rent to people that like where it's an owner occupied building, like for the commercial properties. Like they'll allow lower down payments, which if you run the numbers, that's like multiplies your rates of return like crazy, the lower your down payment is. Instead of paying rent, you're paying off your own loan. There's just all sorts of benefits there. And like being in control, I think just being able to like being in the control of the fate of your business and where you're renting and the price you rent, I think that would make business owners a lot more comfortable. So you take the tax benefits, being in control, low down payments, and kind of being the preferable in a preferable position for banks. I think a business owner owning their own building is a great idea.
And I mentioned this in another video. And again, I never give a blanket statement either. It's great for everybody, but for those who can, it also becomes a great retirement strategy for 30 years from now. When someone retires, they theoretically have a business they could sell. They have an asset they could sell or keep. They could rent this asset back to whoever buys their business or sell it and it's worth more. And you were paying rent anyways. And so that when I've had a couple aha moments from business owners where they're like, oh my goodness, this is it helps every aspect of it and everything you just said as well. So I wrote this down earlier because you mentioned it. So I know you can't go through everything, but different business entities. I know there's LLCs, S corps, C corps, partnerships, give me some general thoughts on that. And I know that's opening up a whole can of worms, but what briefly can you tell us on that?
I would say, let's specifically talk about the LLC. Like in my opinion right now, the LLC can do practically everything that business owners will need or real estate investors will need. But the thing I want you to understand about the LLC is that the LLC is a legal entity, like it's a registration at the state level. It is not it's not the way that it's taxed. So like an LLC doesn't exist for tax purposes. An LLC exists for legal and asset protection purposes. So think of that. So the LLC is like, it's a legal entity, really. But there's 4 different ways that an LLC can get taxed. And this is the can of worms starting to open up. An LLC can be taxed. It can be taxed as a sole proprietor. It can be taxed as a partnership. It can be taxed as an S corporation. And it can be taxed as a C corporation. And just a kind of a real brief summary of each of those. Sole proprietorship, that's when it's all you. Everything gets reported on your personal tax return. It's called the Schedule C. It's like it's the most common way people start their business. It's also, as you're making more money, it's also the worst way, in my opinion, for taxes. But like for legal liability protection, you're the same as the other LLC options, or very similar as the other LLC options. So that's sole proprietorship. An LLC that's owned by like more than one person. So if you've got 2 owners of an LLC, by default, it becomes a partnership. Like you can't have one LLC that files as 2 sole proprietorships. As soon as there's a second owner, it's a partnership. We like partnerships for real estate investing. LLC partnerships, like you can get real estate in and out of those entities without taxation as contributions and distributions. If you sell it, there's tax implications, but that's the partnership. And an S corporation, this is one of our favorite legal structures, and it's a way that we can take a partnership or a sole proprietorship, and we work with the IRS directly. We can convert that sole proprietorship or partnership over to an S corporation for tax purposes only. It's still the same legal entity, but for tax purposes, it's taxed as an S corporation. S corporations, you don't pay self-employment tax on that income, which is one of the main benefits of it. There's a whole bunch we wouldn't be able to cover today, but so no self-employment tax on it. And then the other one, well, quickly to note on those first 3, sole proprietorship, partnership, and S corp, all the income is flowing up to the owner. As far as like taxable income still goes up to the owner to be paid at the owner's tax rates. Those are all called flow-through entities. The 4th one, this is a little more advanced, like as we work people through the strategies. is the C corporation tax strategy. C corporations, or this is an entity, C corporations, they file their own tax return. They pay their own taxes. It's a separate legal entity. It's more of like, when you think of publicly traded companies, those are all C corporations. You can have like a limited number of shareholders, big company, sometimes people, this is where the misunderstanding is. People go, I don't need a C corporation because I'm not big enough. And I almost just said the word like it's for the bigger companies. It's not for the bigger companies. It's just the bigger companies happen to be using that classification. Small, any size of taxpayer, individual or business owner, can use those entities, the C corporations. The benefit of C corporations is that they pay a 21% tax rate instead of whatever the individual tax rate is. And there's implications of getting money in and out of those that we'd want to cover in depth, but just have that in the back of your mind. Like, what would it be like if I was taxed as a C corporation, and run the numbers? Just make, like, through each of those different categories of LLCs I mentioned, just run the numbers on each, whether it's your CPA or you're doing it. Just make sure you understand what each of those means, and run the numbers to help you make the decision.
Okay. Yes, I know it's a whole can of worms, but it's good. That's a good picture of what it can look like, and it lets us ask enough questions to go to someone like you or their CPA and say, what should we be doing here? So I love that.
Yep. Just ask good questions. That's a great way to start.
What are some things, small businesses, some of the biggest or most frequent mistakes you see them doing, or maybe some of the best things you see them doing kind of in their business, whether it's taxes, bookkeeping, anything?
Yeah, well, one specifically with the bookkeeping is where people are mingling their funds. This is like their personal transactions with their business transactions. Like, one, it makes it really hard for bookkeepers to sort through. and we work with bookkeepers, or we have bookkeepers, and just hearing their nightmare stories of how people just mingle things together, it just makes it really hard to separate. But also related to that, like, if you're mingling funds and you want to be protected, like for liability purposes, if you're mingling funds, an attorney would probably say, well, that could mess up your whole asset protection strategy, because you can't be mingling stuff like that. And so you might lose some of the protections that you have with an LLC. And one, like, if you have, like, a recommendation I'd have would be set up your LLC or set up your entity structure, set up the bank account for each entity, and run those transactions specifically through that, because people do miss out on deductions when it's on a personal account or they can't find it. Like, just at the very basic level, make sure your bookkeeping is in order, and you can find receipts, you can find documents, and you've got things in a bank account that you have access to. So that's, yeah, specifically with bookkeeping, is don't mingle your funds. Going back, we've talked about it a lot, but just make sure your entity structure, make sure you understand the entity options, structure that correctly. Don't miss out on your regular deductions. Like if you own a rental property, just make sure you're taking your utilities and the maintenance and repairs. Just, those are the regular things that people think about. Just track those and take those deductions. But then on the other side, the ones that people miss out on, and what I want to highlight here is those more unique deductions and credits. Just become knowledgeable about what's available there. Like, if it's with real estate, make sure you understand how depreciation works and what your benefit is and how much you can depreciate in a year, and do a cost segregation on it. Make sure you understand what credits are available. And one of the biggest thing we see is that, like, the tax law changes a bit. There's usually big changes about every 5 years. And we see people they just kind of get left out. Like, these changes happen, and whether it's a preparer or CPA that's either not completely on top of it, or that's just not brought up, like, people just miss out on a lot of those new tax laws as they come out. It's like years delayed, and they've kind of missed out on 4 or 5 years of benefit. Like, specifically with the bonus depreciation on rental properties, changed in 2018. So that's been around 3 or 4 years is all.
This is kind of a loaded question, and I don't want to say anything negative about anyone, but just, are all CPAs the same, or is there a difference?
I would make sure you understand, like with CPAs, that CPAs can pretty much go in any field of work. So there's accountant CPAs that work at public companies. There's CPAs that are more of like the bookkeeping type of CPAs. There's tax CPAs. There's CPAs that work at law firms. Like just in like the industry, there's just a really wide range of CPAs. And then specifically with the tax preparation CPAs or tax strategy CPAs, there's some pretty big differences. What we find is usually with the business owners, investors, they like to see that we're applying what we're teaching. And I think they like that. They're like, oh, well, if you're part of this deal or you're doing real estate, I think that's one of the biggest differences that people see with us, is that we're applying all these things and we're kind of just sharing what we're doing. And they go, oh, well, that's great. I want to structure my business that way, or I want to do that type of real estate or do that type of deduction. So that's when things started to click for me in the like investing and running my own business, like that's when it got really exciting, in my opinion, just sharing that with everyone else.
I'm a big believer that, you're great professionals in each profession. They'll always make you more money than they cost you, and have you think about things you haven't thought about before and bring other perspectives. And so anyways, I appreciate that about you. So thank you. Anything I didn't ask, or any other advice or final thoughts you have for small business owners or investors?
Yeah, we've brought up a lot of things, and it's been all across the board, as you've heard. My final advice for everyone would be, get enough education, gain the knowledge, ask questions, like get to a point where you understand this. You don't need to know, say, like how to actually convert your LLC to an S corporation. You don't need to know all those extra steps. You need to know that it's an opportunity that you can even do something like that. So I'd say get enough education and knowledge and really take that time. Like running a business is really hard and it's easy to put stuff like this off, but I promise it's worth it. Take the time, get the education, and just remember that you're the one in charge. I'd say, like, you're the quarterback, you're calling the shots. You're just hiring people to help you get to where you want to go. It's not where your professionals want you to go. It's your goals, your life, your family. Make sure you understand enough where you can kind of hire the right people to get you where you want to go. So knowledge and education is my final thought there.
Okay. Well, I love that. Thank you for all this insight. I really appreciate you and all that you do. Thank you so much, Brian.
Yeah, no, thank you, Rob.